amazing fintech pitches will start when I see people seated here. There's plenty of seats here. Ladies and gentlemen, please be seated. I know the lunch was so good that some of you guys can't let it go, so we'll wait for a moment. Hey, I think we have a great opportunity to behave unlike Finns. I've been listening to conversations here today, and the knowledge of fintechs is in this hall. The knowledge of the future of banks, financial institutions. So you guys are great. You have the knowledge already, and you will get the big ideas today. But 2 more minutes and then we start. But that 2 minutes you will be discussing, you will be sharing your knowledge. So I will give you 2 minutes. And during that 2 minutes, introduce yourself to somebody that you don't know. So in a groups of 2 or 3, have a discussion of your learning. So what have you learned today? You have 2 minutes for it. Introduce yourself. Go! You guys are finished, but still, grab the hands, shake the hands, introduce yourself. The core thing is that what have you learned that you are going to use? And when you have a discussion about it, then it comes reality. Excellent conversations. Just excellent conversations. Some of you guys actually had the conversation with a human being, and some of you had a conversation with your mobile phones. Being lived in the US and in Asia, this is so huge difference how we behave. But sharing is caring. And that's also one of the new rules of business. Share what you have and trust other people. The business will follow the trust. And you have to gain the reputation to being trustworthy. But let's start with our first amazing presentation. Tuomas Oksanen, he's a fintech innovator. He has something fresh. He will be talking about the future. Tuomas Oksanen.
Thank you so much. Good afternoon, ladies and gentlemen. So nice to be here. I'm going to skip my icebreaker joke because I have only 5 minutes, and I really want to tell you how all these amazing and disruptive fintech innovations are brought to market in the near future. The traditional way of taking fintech services into market is very time-consuming, complex. There are regulatory demands that these startups face when they try to bring these new services to market. And unfortunately, I tell this from my own personal experience, it can be total pain in the ass. With limited resources, you have some kind of innovation, you want to bring it to market. And then you face the fact that you don't have enough money. There are regulatory difficulties you have to overcome. For example, we had a crowdfunding platform called Fundu, which we brought to market, and it cost us more than 200,000 euros just to get the minimum viable product to the markets. Unfortunately, all that money we spent on our back-end development was in vain, because I want to invest through Fundu because they have so amazing and modular microarchitecture, server-based back-end technology. No customer never said that. They are just back-ends in fintech are mandatory. You have to have them, but they don't bring any customer value. Money is so much better spent on customer experience, business processes supporting your technology, and stuff like that. Therefore, we came up with a new form of developing fintech services. This is a cloud-based, modular fintech backend. Basically, it's WordPress for fintech. So, for example, if I have an idea, I want to start a peer-to-peer lending technology, I can focus all my resources on developing a top-notch front end and just plug my service into our ready-made fintech backend. And this decreases, of course, naturally decreases the costs and increases the likelihood of you to succeed with your business, because you can focus on those things that really matter. Here is a sort of a picture of it. This is what we currently have in our backend. Things like identity, permission, money flows, customer accounts. These are things that are very usually found in any kind of financial service. It doesn't matter if it's peer-to-peer lending technology, perhaps it's a crowdfunding platform, perhaps it's some kind of a mortgage marketplace, stuff like that. You still have to identify your customers. You still have to be able to transfer money. You still have to manage somehow your accounts. These are universal in any kind of fintech service. You've come up with these modules. So why is this so important? This benefits the financial industry as a whole. When we are able to try new ideas at lower cost with shorter product development cycles, we are able to innovate more. It benefits, of course, those startups that are able to overcome the barriers of entry. And when they can invest more money on those things that actually matter instead of spending it on technology backend, their likelihood that their success increases. But this also benefits large financial institutions. When they operate in an ecosystem where there are plenty of small, innovative, risk-taking startups with which they can collaborate or which they can even buy, they benefit. And it makes the financial industry as a whole more competitive when it comes to cross-industry competition. For example, when financial industry faces the competition from Google or Facebook or Apple, this industry needs to be more innovative, and this through lowering the barriers of entry is the key how to overcome the cross-industrial competition. Okay, I have 8 seconds left, so this was very tight. Thank you very much for listening to me. Thank you.
I said to Tuomas earlier that if he's here longer than his time, I will throw him out of the stage. So that's why he was so quick. Thank you very much for excellent presentation. And MFT17 is the Twitter hashtag that you should be using it. Because that's the only way to be existing is to be alive in social media. Next we'll hear Lasse Mäkelä. Lasse is proud that he has been a banker himself, like a real banker. Now he's a digital banker. But he also laughs at his own jokes. And in addition, he's a CEO of the most successful crowdfunding platform in Finland. Let's give a big welcome to Lasse Mäkelä from Invesdor.
Thank you, Antti. Good. The same thing as with Tuomas as well. I have a little bit less time than I thought. But anyway, I'm here to talk to you about digital fundraising. And as Antti said, I used to be an investment banker before. I started in year 97 at Merrill Lynch in London. Did about 8 years in banking. After that, 8 years in the industry, raising funding from different kind of angles of sort of different sides of the table. And what I realized is that generally fundraising is very manual, expensive, and takes a lot of time. And the idea is that what if we would actually move into the digital world? And that's what Invesdor is all about, digital fundraising process. So basically what we provide the companies an easy way to raise funding and to get marketing visibility. And then for investors, we can provide a pre-screened deal flow where they can invest, and making the investments is going to be very easy, like buying a pair of socks in the web shop, basically. So it's done very easy. You can do everything digitally online. Here's our setup where we are currently operating. So we have a so-called MiFID investment firm license from Helsinki. We have passported that to 28 countries in Europe. We can currently accept companies from Finland, Sweden, Norway, Denmark, and UK as target companies. Investors can come from anywhere around the world. We have been working with IPOs, non-listed companies, and listed companies as a distribution channel. So it works on big end of the table and the small end of the table. So digital fundraising process. Our headquarters is in Helsinki, and we have a branch and an office in London at Moorgate. So here are some of the stats so far, what we have been able to realize. So more than 3,000 companies have applied to our service currently, and out of that we have selected, we select very carefully the target companies. There's, I think now, a little bit old data there, but 191 companies we have accepted so far to our service, and out of those, 82 successful equity offerings have been done. We raised more than 30 million euros for our target companies, and our success rate last 12 months was about 60%. So those companies who come to our service, 60% get funding. So why use Invesdor? Lower costs, faster funding rounds, increased transparency, and investment opportunity for all. Very simple proposition. Basically what we can provide to our sort of target companies in general, it's a one-stop shop. So you get pretty much all services from one service provider. The fundraising, the 8-week process for raising funding, and legal support and a lot of other support during the fundraising process. So for the company, it's a nice, well-thought package which we provide. And then for the shareholders, it's a nice way where there is a digital shareholder management tool to manage the shareholders. So the company has the shareholder list automatically, digitally, but also the investors can check out their own investments later on. So very nice process. Normally, when you talk about sort of crowdfunding, you talk about these really the angel and the friends, fools, and family type of this left-hand side corner of the scale. But now, for example, we have now first time a company who is raising funding through us, and there is a VC firm investing directly into that company through our platform. So you can actually see that VCs, angels, all kinds of investors can actually invest through our platform, which is the digital fundraising process. And so sometimes there's been in media these differences, crowdfunding versus venture capital. It doesn't exist. It's a process which works for all kinds of investments. So it's good to remember that. And also public markets. We have been in 3 IPOs now. Interesting IPO was this Heros Systems, where Heros did an IPO to Nasdaq First North in Helsinki. They used our platform for the subscriptions. So basically, all institutional and all retail investments went through our platform. So there was no traditional bankers anymore in that IPO. So we are starting to see this kind of sort of shift where digital platforms are taking over. Cool. I think here are some of the cases we've been working with, but I think my time is now running up. So I thank you for listening to me. Thanks very much.
Thank you, Lasse. Svante Lehtinen from Head Ledger will be talking about cryptocurrencies. Let's give a big hand to Svante Lehtinen.
Thank you. Good afternoon. One of my hobbies is collecting silver coins. And I have to admit that about 5 years ago, I realized that that's not the best way to collect items that appreciate value. But instead, you should collect crypto coins or cryptocurrencies. And this is why. The total market cap of crypto coins as of 1 week ago is about $52 billion, of which Bitcoin takes about 55% or 29 billion. And the others take up 23 billion. There are about 600 cryptocurrencies in total, while 5 years ago there was just 1 or 2, but Bitcoin and Litecoin. For comparison, we have the above ground world silver reserves at about 16 billion US dollars. However, what's more important is that the trading volume of cryptocurrencies as compared to the market cap is something special. The daily trade of Bitcoin is between 1 billion and 1.5 billion US dollars. And the other cryptos take in about $1 billion in total per day. And that's approximately 5% of the total market cap changing ownership daily, which is really, really exceptional. And what this tells us, it tells that the economy is mostly based on speculation. But there's another issue that's very, very intriguing. And this is the point of the new money coming into the field. Now, if you don't believe these figures, I don't blame you. They are pretty out of this world. And I could be just on a vacation from a mental hospital and going back there. But these are actually real. And if you look at them, just look at the speed of this thing, what they are going to. While 6 months ago, the normal time for ICO or ITO, which is short for initial coin offering or initial token offering, was weeks or at most days. Nowadays, in 30 minutes, these types collect up to 50 million US dollars or the best one of these is 10 minutes for $12.5 million in the case of Gnosis. The most strange thing of this is that there's zero dilution, because the investors get back the tokens and the coins. They don't want stock, they don't want shares. So they get back the coins, and the owners of these companies are left with 100% of the stock. And there's nothing wrong with that, because investors get the coins that are appraising in value. So we really don't know actually in detail what is the role of all these coins. They are very advanced instruments of finance, trading and smart contracts and new blockchain inventions, everything like this. However, we know that it's full of substance. It's not vapor, and the figures are not fake. It's real money. So what we are actually looking at is the very leading edge of financial technology as of today. Thank you very much.